Hey, what's up guys? I hope you all are doing well. In this video, I'm not just gonna show you guys my portfolio update, but I will also show you a portfolio that I've discussed earlier as well, and the total return that it has produced over the past 11 years. So if you are interested in building a new dividend portfolio where you not only beat the S&P 500 but also have a growth potential along with the higher dividend yield overall than S&P 500, then stick around and you will not be disappointed. So if you are new to this channel, thank you guys for tuning in. My name is Khan and I show you guys how I'm building my financial freedom portfolio. This portfolio that you see right here is outside of my Roth IRA and 401k. So I am building that portfolio as well on separate form. But this Robinhood portfolio is my taxable account where I pay taxes every single year. Current portfolio stands at around $172,000, and all time I'm up close to 22%, which is $31,000. I'm sitting with over 13% cash, which is $22,800 of the total investment that I have here, and I am adding $1,600 every single month to this portfolio, and this is from my 9 to 5 job. So now with that summary out of the way, let's jump right into the topic that you are here for. So this is a dividend portfolio that I've shared previously as well, and I wanted to show you guys now as well with almost 9 to 10 years of total portfolio income, value, and everything. So I'm using a website called portfoliovisualizer.com, and this lets you backtest the portfolio, the stocks that you have had, and you can compare it against different portfolios, and that's what I'm gonna do in this. So what I named this portfolio is I named it as dividend growth portfolio, and these are the only 15 securities that it has. So number one is Aflac, Johnson & Johnson, Texas Instrument, Nextera Energy, Costco, Waste Management, Microsoft, Automatic Data Processing, Illinois Toolworks, Chevron, Lynn PLC, Caterpillar, Lowe's, and Broadcom. So if you look here, it has different percentage of different stocks or securities. So ADP, if you are invested 6%, ITW, you are investing 6%, CVX, you are investing 6%, and the rest, most of these are allocated 7% of the total portfolio value. And this equates to 100% of total investment. So these 15 stocks make 100% of my dividend growth portfolio. This portfolio itself has a total return year over year of 20.3%. This is Warren Buffett kind of returns, to be honest, and it has a volatile 15.3%, whereas drawdown of 18.1%. We'll deep dive into this later in this video, but just to show you guys the portfolio growth, $20,000 invested in January 1st, 2015 would be worth almost $120,000 by the end of August, and this doesn't include the returns of September, which are even higher now. So it is grown substantially, so 20% every single year. Compared this to S&P 500, which has returned 13% year over year for the past 10 years. But I want to make sure one thing here, that these kind of returns, even 13% from S&P 500 index ETF, are not normal. Average return over past 100 years is 10% every single year, but 13% over the past 10 years is not normal. And compare that to 20% return, which I have built this portfolio. So you'll see this portfolio in action with respect to returns as well below. So this is again S&P 500. So every single year you'll be beating S&P 500 by 7% or more, with almost the same volatility, and drawdown that is less than S&P 500. And just to put in the mix, I've also added SEHD, which is the king of dividend ETFs, in combination with QQQ, and allocated 50% each. And the returns of that is also less than what my dividend growth portfolio returns are over the past 10 years. So this 15.2% return is every single year since 2015 till 2024. And $20,000 invested again in this portfolio would have resulted you to have an end balance of $78,500, which is substantially less than the $120,000 which we got from this portfolio that you see here. Now, looking at the performance over here, this is the performance summary. So look at these numbers, and I was surprised and blown away with the total return that this portfolio has shown me. So start balance is 20,000, and we are going with 20,000 in all of these three portfolios. Comparing it, the end balance is $120,000. This includes the dividends reinvested. So if you have had any dividends, you reinvest buying more shares of the same security that has given you that dividend. And even with that, SPY is lagging behind both of these portfolios, but almost half of what my dividend growth portfolio has shown here. The best part is, if you look here, best year of this dividend growth portfolio is better than both of the other best years, S&P 500 and SCHD plus QQQ portfolio. Both of these portfolio are lacking my dividend growth portfolio. And the worst year is even more surprising, that it has a maximum drawdown of 8%, which compared to S&P 500 18.17%, and SCHD and QQQ with over minus 21%. Again, Sharpe ratio and Sorrentino ratio, you can look at that as well as a matrix. But look at the growth here. The growth of this portfolio is exponential. It has started chugging along with the same growth as SCHD and QQQ, but it has substantially outgrown and outperformed the other two portfolio. And annual return, if you see here, even the year 2018, when both S&P 500 and SCHD plus QQQ portfolio returned negative, this dividend growth portfolio returned positive, and that's mainly because of the high dividend that it pays out. And even on the drawdown years, you see it has not shown much of a drawdown compared to S&P 500 or SCHD plus QQQ. Now, looking at the total performance over the years, the annualized return of 3 year of 20.35 is almost double than S&P 500 here, which is less than 10%. And then this SCHD plus QQQ has also returned less than S&P 500. What you notice here is that this dividend growth portfolio has been performing consistently. It doesn't have those big swings that other portfolios have seen. If you see here, the 5 years and 3 years return, full is almost 10 years return, 5 years and 3 years return are all around the same 20%. So that's even better. And the most interesting and my favorite part of all of this study is that this portfolio that I've shown you has produced a lot more dividend growth over time. This has a bigger returns of dividends as well. So it's not like that you are missing out on dividends if you invest in growth stock. That's what usually happens. But in this case, if you see here, you are investing in growth stocks as well as the dividends. You are beating dividends plus growth by a whole lot. So 1,763 dividends collected last year if you would have invested only $20,000, which is almost 20% of the total return on investment just from the dividends, and over 20% every single year total return. So that's amazing. These stats are amazing. Another important aspect of all of this is you look at the diversity in the category section here. So we have covered financial services, healthcare, technologies, utilities, consumer staple, industrial, again technology, industrial, energy, basic material, consumer discretionaries, technology, and energy in form of Chevron. So that's all spread across. And real estate, I avoided REITs here for a reason, and the reason being that REITs are not the best if you talk about the overall returns, and they are not dividend efficient either, so they are taxed three ways. So yeah, that's the reason that I don't invest in REITs usually, but I do hold realty income in my Roth IRA portfolio. But anyway, this was something that I really wanted to show you guys and give you guys a good understanding of how much you can actually make. Not only you'll be beating the overall total return with respect to growth, but also your dividend portfolio yield would be more than SPY and SCHD, and that's a fact. It's been a great portfolio over the last 10 years. And I think if you look at all these 15 companies here, again, all of these names are either dominant of their own sectors, or they are dominating with monopoly in the business that they already have. So that's how you invest in the quality stocks and dividend paying stocks to secure your future. And dividend growth has been a big factor here as well. If you see here, drawdowns for dividend growth portfolio, the start was January 22nd, which was the biggest drawdown, and end was September 22. So if you see here, a drawdown happened from Jan to September, and it recovered by May of 2023 compared to December 2023 here for SPY, and December 2023 for SCHD plus QQQ. So that's about it. Thank you guys for watching. If you guys like these kind of videos, let me know, and I'll actually build this portfolio on my separate account so that I can share with you the performance of overall of this portfolio with a beta that is less than 1%, and dividend growth which is extremely high compared to S&P 500. So that's about it. Thank you guys for watching. I hope you guys like this video. If you haven't already subscribed, please make sure to do so, and check out the links in the description below, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.